Hi Gabe. I'm working on retirement planning, and would like to know the difference between a Roth and a traditional IRA.
Carlos, at 32 years of age, this is the perfect time for you to be thinking about a good retirement plan.
I know retirement is a long way off. I understand there are some important tax considerations between the two.
Yes. There are many things to consider when planning your retirement, including actuarial estimates, return on investment, life expectancy and such. I will stay in my lane, and only share the tax considerations. By the end of this video, I will give one external reason why one may be better than the other. Welcome back YouTube community. Gabe here. Last week, we talked about your YouTube business, and using the SEO tools of TubeBuddy. Today, let's discuss the difference between a Roth IRA and a traditional IRA. Depending on your age and retirement goals, one could be much better for you. Our discussion will be limited to the tax considerations. Shall we begin? Carlos, tell me a little more about your YouTube business.
Last year, my partner and I sold our information technology company. My wife is the principal of the local high school. I invested most of the proceeds from the sale and we augment her wages with dividends from our investments. I started a YouTube channel to give tech talks. It will take a while for the channel to grow.
You sound like you already have a good plan in place. What would you like to do differently?
I understand my wife can contribute to a spousal IRA for me. I want to set up a retirement account, but I'm not sure which is better.
Let's take a look at the two from a tax perspective and see which is better. Let's start from the beginning. A retirement account is a way to set aside money that you can use at some point in the future. The benefit of a retirement account is that the income earned within the retirement account is not taxed until you access that money in the future. Compare that to your regular investment account. You receive dividends and capital gains, but those gains and dividends must be reported as income currently, and are taxed every year as your investment grows. A retirement account defers the reporting of earnings within the investment. Your investment can earn dividends and capital gains, but they are not taxed currently. They can grow tax-free. The two retirement accounts you mentioned, Carlos, are the traditional IRA and the Roth IRA. In the case of both, all transactions and earnings within the IRA have no tax impact. But that is where the similarities end. The major differences are: 1. Whether contributions are made pre-tax or after tax. And 2. Are withdrawals taxed and taken tax-free?
Isn't a contribution to a traditional IRA a tax deduction? That's a good thing, isn't it?
Contributions to a deductible IRA reduce taxable income currently. Distributions from that account in retirement are taxable. However, contributions are deductible as long as your modified adjusted gross income is below a certain threshold. Contributions to a Roth IRA are made after taxes have been paid. Upon retirement, you may take your withdrawals free of any tax liability. Again, you may contribute to a Roth IRA as long as your modified adjusted gross income is below a certain threshold.
Should I worry about the threshold? My wife earns $95,000 per year, and we report about $3,000 per month in investment income. She participates in a retirement plan at work.
The deductions phase out at certain income levels. In 2020, deductions for a traditional IRA for a married couple become non-deductible when your MAGI reaches $124,000, if you are covered by a plan at work, and $206,000, if your spouse is covered but you are not. In your case, your spouse would not be able to make a deductible contribution for herself, but can make a deductible contribution for you. In the case of a Roth IRA, you cannot make a Roth contribution if your MAGI is greater than $206,000. There is a backdoor technique where you can make a non-deductible contribution to a traditional IRA, and then convert it to a Roth, but that gets a bit complicated. The numbers are lowered to $75,000 and $139,000, if your filing status is single or head of household. Please review IRS Publication 590-A, for a more detailed discussion of the contribution limits.
I can make a deductible contribution, but not my wife. How much can I contribute?
In 2020, you are limited to $6,000. Taxpayers 50 years and older may contribute an additional $1,000 for a total of $7,000. The numbers are the same for the traditional and Roth IRA. However, your deduction is limited to compensation. If you do not have compensation as defined by the IRS, you may not make a deductible IRA contribution. Your wife's compensation qualifies. Your earnings from investments do not qualify.
I am still thinking about which way to go. How much time do I have in order to contribute to either IRA?
For 2020, you have until April 15, 2021 in order to contribute to a traditional, or Roth IRA.
I like the freedom of access to my money and my investments. If I put my money in an IRA, isn't it locked in? I no longer have access to it for decades.
Not necessarily. With a Roth IRA, you can withdraw the amounts you contributed at any time. However, if you withdraw an amount greater than your contributions, it will be subject to tax and penalties for early withdrawal. Other than that, you must wait until you are 59 and a half before you can take a distribution from either a traditional IRA or a Roth IRA without penalty. Once you reach age 72, you must make required minimum distributions from your traditional IRA. Your retirement account trustee will use actuarial tables to let you know the amount you need to receive annually. There are no required minimum distributions from a Roth IRA. Please review IRS Publication 590-B for more information on distributions from individual retirement accounts.
Pay tax now, withdraw tax-free later. Or tax deduction now, pay tax later. I'm still not sure which is better.
The major consideration, Carlos, is what you think your income will be in your retirement years. And what you think the tax rates will be in your retirement years. There is a common misconception that people who are no longer actively working would have a lower income in retirement. That theory is undermined by your Generation X and Gen Z friends. Many are convinced that they will need considerably more income to maintain the quality of life to which they have grown accustomed. Your second consideration is what tax rates will be in your retirement years. The United States is woefully in dysfunctional deficit. However, the needs of the many are clearly outweighing the needs of the few. And the only way to address our social contract with our citizens is through taxation. I am not a betting man. However, I would suggest that the tax rates in your retirement years will be higher than they are now. The more tax-free income you can generate, the better off you will be in retirement.
Yikes. Gabe, I hate thinking about politics. But you raise a good point. With a Roth IRA, I can have the flexibility to withdraw my contributions as needed without penalty. And as long as I allow it to grow, I can take distributions in my retirement years tax-free. So far, we have not suffered an unusual tax burden from the investment income. I will see what Acorns has in the way of a Roth IRA mutual fund account. Thanks for going over this with me.
You're welcome. The main difference between a Roth IRA and a traditional IRA is whether you want a tax deduction on contribution, or tax-free income when you retire. In 2020, you are limited to contributions of $6,000, or $7,000 if you are 50 and older. You have until April 15, 2021 to make a 2020 contribution. Earnings grow tax-free in both. There are penalties if you withdraw contributions and earnings from a traditional IRA before the age of 59 and a half. The penalties only apply to earnings for a Roth IRA. Please review IRS Publication 590-A and 590-B regarding contributions and distributions to and from an individual retirement account. Please use this information for educational purposes. Consult your tax professional, investment advisor, or attorney for further guidance in your specific situation. When considering a traditional IRA or a Roth IRA, I hope what I shared can help you better understand which retirement account is better for you. Please leave any questions in the comments section below. Let me know if there is a subject you would like to see a video on in the coming weeks. Please like and subscribe with a click to the thumbs up below. Have a great week. See you next week with more tips for your YouTube business. Cheers.